So yeah, that was another great meeting. Hey, thank you guys for attending the meeting. And so we're going to answer just a couple of questions here that I saw in the chat, and I'll go from there. So on the agent attraction, do you think this is a great time to reach out to people, or do you think we should wait till the end of the year? Well, here's my thought on that. My thought on that is there's not a bad time to reach out to anyone as far as the agent attraction part, because everyone is different and you don't know what's going on in people's lives or people's businesses. I also think that we really have to get away from the just reach out part and to the attract part. And what I mean by that is that we need to be showing more value. And I know I'm very guilty of this, because it's really exciting for us to be with EXP. It's exciting for us to be with this company while it's just growing, and there's things that we can see, that we can feel, that we are contributing to and are also a product of fantastic things happening in our company, in our groups and our teams. But from the outside looking in, people don't necessarily know that. And there's a lot of misinformation out there about our team, about our company, which is, which is normal, which is, some people call them haters. But we'll just say from the growth of our company, there's some skepticism, right? So because of those things, it's pretty normal for it to be that way. So I would tell you is that just to continue to drip on your people, hug on them, love on them. Don't get frustrated if they don't come. Don't get frustrated if they're not ready. People are ready when they're ready. They're not ready when you're ready for them to be ready. And I'm saying this stuff to you, but I'm also saying to myself, because I have to remember these things as well. But that is a good question. So let's see here. What do you think in regards to the market crashed in that? Well, we were talking about that in the, in our Zoom. So I'm not in the camp that things are getting ready to crash. I'm not in that camp. But I'm also I'm also an eye test person. And you guys heard me say this before. I'm in the trenches. I'm just not a stats person. Not saying that stats and analytics don't matter, but I'm saying that there's certain things that either A, it can't measure, or B, the stats and the data haven't caught up to what's really going on yet. So you know what I'm saying? So in the time that I've been around, even though things have drastically improved with technology and speed of light and communication and all that, but at the end of the day, when you're looking at real estate data, the majority of the time, the data is closed sales data, maybe some pendings, whatever the case may be, but the data is old. It's not old like ancient, but it's old like it was 30 days ago, like it was 60 days ago, like it was what it was at that particular point. But the market continuously evolves and continuously changes. So because of that, you gotta have your eyes and your ears on what's going on. So if a person was barely qualified and the interest rate was 2 3/4, and say their rate wasn't locked, and now all of a sudden the interest rate is at 5 1/4, even if they're in escrow or situations like that, now all of a sudden they don't qualify. You got to keep your mind open. That you can hear me say this an awful lot about consumer sentiment. Why am I talking about consumer sentiment and so hard on that topic? I'm hard on that topic because people need to feel good. They want to feel good about their purchases. They want to feel good about their incomes. They want to feel good about their savings. They want to feel good about these things and these opportunities. And when you go to the grocery store and eggs, milk, bacon, everything is up 3x. And you go to the gas station and the gas, in the area, we're at, gas, $3, and now the gas is, $6. When you go to anything in your cell phones, this stuff is increasing, steadily increasing on you, but your income is not necessarily increasing. Then you go and most people have their monies invested, beside real estate, you're going to see them in the stock market, and now obviously in crypto. And I don't care about hodling, I don't care about trading, I don't care about what it is. This is what I know. I know is that the majority of us will look at something, and if you got, an example of say $100,000 sitting in your 401k, sitting in your stock trading account, sitting there in January, you're feeling kind of good with yourself, chest pumped up, just feeling good, right? You're feeling like you're going in the right direction. And all of a sudden you feel all these squeezes in all these other places. And then all of a sudden you pay attention, you look at the value of your 401k, or the value of your savings, your stock account, that was $100,000 in January, and here we are in May, and that may be worth 40,000, 45,000. Hey, you know what? I don't care. Mentally, if nothing else, you tend to look at that, and you know what? You become a little bit more cautious. You start to think about things a little bit different. You don't feel as good. You feel like my money, my savings, my investments are down. My income is the same, and all of the expenses for me to live daily have gone up. That consumer sentiment can have a big time effect on what happens in not just real estate markets, but the economy, period. So yes, I pay attention to that, because, you know, you keeping it real, we all feel that way too. You know, the consumer is us too. So just think about that, and keep those types of things in perspective as you're making your moves. Should I back up off of marketing, lead generation? Okay, so there's a lot of different rules and thoughts of that. A lot of it depends upon how you do your business. How do you get your business? You know, is your business mainly by, you know, making calls, knocking doors, some old school elbow grease type marketing? Is your business, your lead generation, social media stuff? Is there a strategy to it? Is it cost effective? Are you buying leads? Are you spending money, you know, through the paid advertisement forms for leads? I'm not saying anything is right or wrong on any of that stuff, but you have to evaluate it. And what I would tell you is that, one is you definitely should not back off of anything that's working. If anything else, something that's working, you probably want to invest more in that, whether it be money, whether it be time, resources, whether it be leverage. You may want to do that. You're going to have some losers. Take a look at those losers and get your ego out of the way. I'm actually started doing that 2 weekends ago. And there's some things that you may, it's time to cut. You know, it's time to cut. Maybe can you add them back? Sure, but you get back to that old red light, green light. Red light, green light meaning that, you know what, you got to lead by revenue. If you guys ever read the Millionaire Real Estate Agent book, Lead by Revenue. I think that that's very prevalent. I think that's prevalent in any real business, is that you add on as you're making money to. You just don't necessarily pour money into something. And now with things maybe getting a little bit tighter, you want to make sure that you squeeze your dollars as much as you can. All right, you guys, that's enough questions I'm going to answer from this time. We'll see you guys at the next training, and we'll have another question and answer period afterward. Thank you for coming. Thank you for listening to the questions. God bless. I look forward to seeing you guys soon. Keep your heads up. Stay in the marketplace. Help as many families as you can. Build your businesses. It's all good.